Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, February 25th, 2024. Markets are now closed. It's about 10 till 5. What I'm going to do in this one is I am going to start out with the major indexes. We'll look at the large caps as well as the small caps, IWM, maybe RTY futures. Quick update on the VIX, since that's very much related to the stock market. I stand corrected. I had a brain fart this morning when I get that post out to you. Somehow thought we're on Wednesday. NVDA reports tomorrow, Wednesday after the close, and I had in my head it was today. So that's tomorrow, and that's when the market will pick the next direction. So on that, I'm going to cover the Mag 7 or 8 or whatever you want to call them, including NVIDIA. Quick update on SMCI, since I call that kind of NVIDIA sidekick. Bitcoin, MicroStrategy, those two are intertwined. MicroStrategy is going to follow Bitcoin wherever it goes. We had a breakdown today in Bitcoin, that level I've been watching for a while. I'd like to hit gold and silver. I'm getting into a lot of stuff now, and I'm going to cap the video. I'm not going to let this one run an hour or more. So if I need to, I'll pick it up tomorrow. If I don't get to gold, silver, I'd like to talk on wheat, corn, soybeans, the other ag commodities I've been talking about, but then natural gas. And what I'm going to do, so I'm going to at least cover the markets and that kind of stuff highly related to the stock market, highly correlated, such as NVIDIA, SMCI, Bitcoin, MicroStrategy. They've all been trending together. They're risk-on assets. And well, when we have a risk-off market, they're all going to fall together. And then there were several questions I noticed just before I started this video, so I'll get to those. And then again, time permitting, I'll either get to the commodities, gold, silver, everything else, or I'll do that tomorrow morning. All right, so let's start out here with QQQ, NASDAQ 100. Quick update. You can see a lot of lines on this chart, but the ones that stand out are you have a key trend line right here off the beginning of January 2023, major uptrend line right there. You had one brief violation right here during that big sell-off right there into the key August 5th lows. When we hit the 200-day moving averages, we were short that leg down. We covered the morning of in pre-market when it was even lower than it looks right here, and covered and reversed long there. And that was pretty much the last test of the 200-day moving averages. Looking for at least another test and ultimately a break based on the technical posture of the charts. If and when we get that break, again, solid daily close will certainly help and be a sell signal, but with the 200-day moving average, all the better if you can get a weekly close or start really walking away from it intra-week on the daily chart. First things first, we're not there yet. If there's going to be a catalyst to do it anytime soon, it will likely be NVIDIA tomorrow after the close. So then you're going to have to pretty much wait till see how the market opens on Thursday and how it closes a week on Friday. So this is the recent trading range I've been harping on for a while now. We've been in that trading range going back to last fall. And most recently, we popped the futures, which I'll get to in a second. The NASDAQ 100 futures did not make a new high, just like back in late 2022 or late 2021, early 2022, the beginning of 2022. The NASDAQ 100 peaked first a few months earlier back in the fall, and then the S&P 500 made a new high right in the beginning of 2022, early January, and the NASDAQ 100 made a slightly lower high, a lot like the futures so far have. And so when we're in this range, I said if we do punch up, any new high before we got there would be a marginal new and still divergent high. It was guaranteed based on the posture of the indicators, the negative divergence, and it was. And I said then you'd have your sell signal, nice sell signal would come when we fell back into, I gave you the green and red lines on the 60-minute chart here, and said I expected the breakout to fail and then a fallback below that green line about 534 would do the trick, and it's been just nothing but impulsive selling since. I did a video earlier today, and this is a first. All these years of doing videos, as I was about 80+% finished. I was covering this, and during the day we were right here. I have a little bottle, cup of water, one of those Yeti hard metal cups insulated cups full of water, and I slid my mouse into it. I have one of those MX Master 3 mice from Logitech. Love the mouse, but it has the little click lips. What do you call it? The top, the left and right. They overhang. And so as I slid that into the cup, it depressed the button and stopped the video, and it didn't stop it where it usually will then go and save it. And it didn't. The video was lost, so I'm like, scrap it. Anyway, that's what this is kind of a recap of that video. And what I did point out in that video, which was lost, was this was support. This is what we hit today, 510.43. You can see very good support. When you're looking at a chart, you want to look for the more reactions. You look for things like gaps. There's a top of a gap and reactions from above. Then once that became broken support, becomes resistance, you got a rejection there, then a breakout above it, then a successful back test after that big drop off that divergent high, flirted around it, had a brief breakdown but regained it. And where I was going, so you have a lot of reactions there, but most important when I analyze a chart are the recent reactions. I put a higher weighting into that. So you can see the last two key pivot lows since late January were exactly at this level. And so in that video, I said this is probably where, and that was earlier today, and it was where the bounce would stop. But again, NVIDIA's tomorrow. This market is going to go most likely into a holding pattern. I suspect we could get some more selling, some nervous profit taking. Tech has been weak. A lot of leaders have topped. Remember, we had bearish engulfing candles. I haven't seen this in a while on just about every single one of the important indexes. There's a lot of indexes out there, but the ones that matter the most are the S&P 500, the NASDAQ 100, the Wilshire 5000, those indexes, VTI, which pretty much tracks that, and that's a basket of an ETF that tracks an index that covers the entire stock market, large, mid, and small caps. And so, again, those are on the weekly charts. And you also had, again, follow through to the downside so far. Now, at the end of the day, yes, this is bearish. It's been a great swing traders market, rips, dips, all these divergent highs, lows within the range. I know it's been frustrating if you're not experienced at this. If you're new to this, that's probably why comments until today, they've been pretty quiet. And I get it. And I've addressed that for weeks now, that if this isn't your cup of tea as an active trader, sit back, wait for a resolution of this trading range. Again, I know it's busy here, but it's just this big purple box. That's the trading range. My expectation all along has been, even if we had a false breakout or even get another one based on the technical posture, will most likely break to the downside. But unless that happens, as I like to say, support is support unless broken. So about 500 is the bottom of the range right there, give or take. It's not super well defined, but it's this major reaction low, that divergent high. Got a couple reactions in there and gaps and all that. Either way, that's where I put the line. And then, of course, below that are the 200-day moving averages. And like I said, NVIDIA is most likely to either make or break where this market's going to go. In other words, if we're going to break out of this range in the next, this week or next, it'll most likely be NVIDIA that drives it. And again, I haven't wavered on that. My expectation is a downside break. It's worth to me positioning that way going into NVIDIA earnings. Unless you're a complete absolute gambler or risk taker, you can't bet it too heavy. The primary trend is bullish. You can certainly take what I like to call a starter or partial position and wait for the next level, support levels to break to add on. Or if we punch to new highs and the charts start to firm up, that's where you consider stopping out. You could do either a hard stop or what I usually do when I'm same way, I'll scale or average into a swing or trend position. I'll scale out if the charts start to go against me, if we break through one resistance level after another. Okay, so let's talk about the levels to watch. That's it, 510.43. Again, take it with a grain of salt tomorrow because NVIDIA is going to report after the close. It's kind of like going into a big FOMC meeting when a major company, one that's going to move the market. NVIDIA is, I've maintained for over a year now, the single most important stock in the stock market, whether or not, as like, for example, today, it's a little below. It's number 2 is the way, as far as weighting in the S&P 500 and NASDAQ 100. It's just a hair behind Apple at 3.3 trillion with Apple at 3.7, but they've been leapfrogging. But again, it's not about that mathematical weighting. It's the psychological importance, in my opinion. It is the absolute poster child of the AI hype, AI bubble. If you don't think it's a bubble, we can agree to disagree. If you don't think Bitcoin's a bubble, we can agree to disagree. I'm going to get to Bitcoin in a second. But I don't think we will disagree on the overall importance that NVIDIA is a very significant psychologically, and as far as mathematical weighting in the index is important to the market. So there's your levels, kind of nitty gritty, micro. You go to a weekly chart, different boards here, but you can see the same trading range pretty clear right here on the weekly, right? And you can see I have a trend line here. It's de-highlighted, but that's it right there. There's an uptrend line there. This was a more minor uptrend line that recently broke. We've been going sideways, and you had this previous all-time high, then a breakout above it. And so this whole trading range has been back testing the breakout to new all-time highs over that late June high, I think it was. And so if we break it and then we take out this uptrend line, and then you can see here on this chart, I'll turn off all the lines. These, even though I'm on a weekly chart, these are the 200-day moving averages. Same here on a weekly, you just put a 40 period. It's same thing. And so it's just a massive confluence of major support. And so that's kind of, in my opinion, the all-in moment. When you see a big candle through there, especially if it looks like we're going to get a solid weekly close down below there in this weekly chart, that would open the door. These are still my long-term targets down here, still favoring a move. Still calling for about a 50% drop in the NASDAQ 100 down to about the 260-ish level. But we need to get the sell signals. All right, so that's QQQ. Let me jump over to SPY, then I'll get to the futures, and I'll cover the small caps as well. Same thing with SPY, multi-month trading range, ever so slight marginal and still divergent high. And I've said it even before we got it. Not just that would be my expectation based on the technical posture, the overbought conditions, the negative divergence, all that other stuff. But this market has a pattern of making a new high, and then the new high gets sold off and it keeps going on. Yeah, recognize it makes a new high and new high. But this time these are so incremental and you keep getting shot down. But again, bears win below the trading range, bulls win above it, but they win with a little asterisks, in my opinion, because it's not a breakout that I think is worth chasing, because I bet I would put good money it will fail, again, based on my technical read on the chart. And again, not to mention all those bearish engulfing candles we had last week on all the key indexes, the most important ones. So those are levels to watch. We'll see what happens tomorrow, and well, more so Thursday and Friday after NVIDIA reports. They're kind of like an outlier for the Mag 8. Most of those report within a week or two, a couple weeks of, from each other. And NVIDIA kind of does its own thing. All right, so that's SPY, the S&P 500. I still have long-term targets on the S&P 500, calling for a drop down here. Also about, it's not as much. NASDAQ 100, it makes sense that my drop is about 50%, but only about 42, 43 on the S&P 500. I call this Grandma's Index. It's chock full of dividend-paying, steady Eddie, utility, healthcare, defensive issues like those, whereas the NASDAQ 100 is a very tech-heavy, higher beta index, higher growth companies that go up more in a bull market and then fall more in a bear market. All right, IWM. Small caps. This is my daily time frame here. You can see this white trend line is very significant. Trend line off the October 2023 lows. We broke down there. I addressed it at the time, but told you it's not a breakdown to chase, because we had dual support. We had nice price support. More importantly, the 200-day moving averages, which they buy every pullback to or have. And that's what they tend to do in a bull trend. Just turn off all the lines, buy pullbacks to the 200s. And when the 200s break, then that is a sell signal. Now, this is intra-week. We are below it right now, so you got to give it that. And we took out the 200s today and closed below it. We took them out yesterday, actually, closed below it. And then another close today, so that's check mark for the bearish case. If you look here, we do have a slightly, ever so slightly lower low with higher lows in the indicators, aka positive or bullish divergence. Now, if you followed me for any period of time, you know I like my divergences, bullish and bearish. I like to go long on divergent lows, especially at support. That's what we have here. We're close enough proximity. But remember the bigger picture, and this is just a daily chart. I showed you on a weekly, go back to even a monthly chart. Big divergences forming, and what happens in a bear market or a primary downtrend, just like in a bull trend in reverse, you start building in a bull trend, you start getting divergent highs as you're going up, but then they get burned through, taken out, meaning prices keep falling, and all of a sudden the indicators no longer have higher lows, and that negative divergence gets taken out. So in other words, guys, it's something to watch for. If we can reverse here, if the market likes what NVIDIA is selling, then you want to see this trend line right here. See that downtrend line off the highs get taken out. You definitely want to see 220, about 227 right there taken out. Above that, there was a top of that little trading range. That would be a level. So these are all check marks for the bullish case if that happens. Whereas if we continue lower here, especially if this divergence gets taken out, we start flipping some longer term indicators. You can see this primary uptrend line's already been taken out. And this is what it looks like on a weekly chart. And so there's a boxed in range. It's kind of support right there. So a little more downside should do the trick. All right, so let's see what happens. Again, to summarize, yes, I am showing you things that can be bullish, things that can be bearish. That is my job. I will give you my opinion. I always do if I have one, strong opinion. If I don't, I tell you, hey, I don't have much of an opinion. And so in this case, I can tell you which way I think it's going, but I can also tell you it can go either way. I'd be a fool to say otherwise. And that, you can place your bets. I will usually do that as to which way I think things are going to go, and then stack onto those bets as the evidence tells me that I'm right. Remember, just a little sidebar here, tip I learned years ago, read up on this and know it to be true. A big difference between retail traders, aka, no offense, you can call me that if you want, even though I do this professionally for myself for a living, I don't do it for a company. They call them the dumb money, and then the smart money's institutional traders. But professional traders as a whole, those experienced, especially institutional traders, tend to not average down on a position. It's the retail crowd that buys Apple at 100 and then it goes to 90, they're down 10, they add more, and then it drops in a bear market and they keep buying it down, and they think that they're lowering their cost basis, which technically are. But a professional trader will usually not do that, because if a position goes against them after they started taking it, number one, it tells them they were wrong on their call. So professional traders will typically scale up on a position. In other words, add to it as it's moving in their direction. And so in this case, if you were to be short the small caps, already have a position, you'd want to wait for that to break down. Likewise, if you're bullish, you can wait till the aforementioned levels get taken out, and then at that point maybe be in a full position, because you're probably going to punch up to new highs there if all those resistance levels are taken out. All right, quick update on the futures for you. That's short term. I'm going to give you this one here. No, let's go back here. Let me show you my 6-month, 2-hour candle NQ. This is kind of a busy board. So you can see here, this was the previous all-time high in NASDAQ futures back in mid-December. We failed to make a new high there. But what we did do, as I pointed out, we put in a divergent high, negative, i.e. negative divergence right there, clear. No different, and it's almost equal in scope to this previous divergent high when we had that drop, which we ended with a divergent low. That's bullish. Divergent high, drop. And this is the most recent divergent high, and we dropped. We fell back into the range, as I said back then before it happened. If we drop back into below the green lines in QQQ and NQ, which was 22,100 there, that would be your add-on where you'd want to add on to or initiate if you didn't have one, a short position. And it's been nothing but beautiful selling since. And again, earlier today, we hit, you can see it's very good support. It's the same support I just showed you on QQQ and SPY. And that's where we close the day. So the market will wait and see. We'll open up tomorrow. If that support breaks tonight or tomorrow, My guess, we'll probably see a little more nervous selling before NVIDIA reports. I firmly believe the RR, the risk, is skewed to the downside. Earnings can go either way. Based on my read on the chart and where we're at, my bet is to the downside, but it can go the other way. But I think there's more risk for somebody going long into earnings on NVIDIA than going in short for many reasons, technical and fundamental. So that's it. Those are your levels. There's the next level there, the red line that will most likely start to accelerate selling. And then, of course, the green line. Really, it's just the big old trading range right there. And again, sooner or later, like all trading ranges, we're going to break one way or the other. And then that will most likely determine the next trend in the market, unless we get another marginal new high that is still a divergent high and other reasons to fade it or not take it. ES, the S&P 500 futures, I do have for you here somewhere. Hold on. Here it is. This is a 60-minute chart. Let me just jog out to a 2-hour candle, 6 months a little. You can kind of see it there. Just a big slop and chop top right there. Trading range, roughly the bottom. It's not super well defined. The top's pretty well defined. And just like the NASDAQ 100, the futures never made that marginal new high. The cash index did, the spot index. So go back to a 3-month. I have it marked up pretty well. And you can see there's that previous reaction low right there. That red line, I think, will most likely do the trick. We punched through there a few times, but we had positive, aka bullish divergence each time. That was a divergent low. That was a divergent low. You can see my divergence lines drawn. And then the bigger divergent low there that gave us the bigger rally, divergent high, boom, divergent high, boom, divergent high, boom, divergent high, boom. And divergences aren't sell signals, but what are breaks or patterns, like a bearish rising wedge pattern, breakdown. There was that fallback below that yellow line I wanted to see, 61.08 or so, and then so there we are, guys. And if you remember, just last week I told you that based on where we were in the trading range, meaning we were up near the top, I said the risk, we're much closer. There was no risk a week ago of breaking to the downside. So you were kind of, in a way, I just pointed that out, that the risk was for a breakout to the upside because you were in close proximity. Now, if you look, we're in spitting distance. We bounced a little off the lows today. There's a little downtrend line they might try to pop. Remember, take any breakouts or breakdowns tomorrow before NVIDIA reports with a grain of salt. Pretty big one. But after everything's said and done, if we can take that out, especially that previous reaction, major reaction low right there, then that's going to pretty substantially increase the odds of my longer-term targets being hit. If NVIDIA takes us back up again, we'll be looking for here, and we might get a breakout. I will address that at a time. There's no reason for me to waste a lot of breath on that right now because we're down closer to the bottom of the range. To get back to the top from where we are we right now? We're at 59.79. We have to rally. It could be done one day. It's be a big day, but about a little better than 3%, just to get back to the top of the range. So again, if that happens tomorrow, after NVIDIA reports, I'll address it. Otherwise, get ready to move if we start breaking down. There's a lot. I got price alerts firing off like crazy today. I'll try to get to some of those. Okay, you've been updated on everything on the futures except RTY. RTY, where are you? I've got you here somewhere. There it is, Russell 2000. This is 6-month, 2-hour candles. Previous reaction low right there, previous reaction low, positive divergence, just like I showed you on IWM a minute ago. And this is just, again, swing trader stuff. Divergent high, drop. Divergent low right here, rally. Divergent high, drop. Bounced off support there, put in another divergent high, had about an equal high. The divergence that was in place at the previous high right there, divergent 1, divergent high 2, divergent high 3. This was divergent high 2, drop 2, drop 3. Bigger divergence, typically the bigger the drop. We're back to support with positive divergence. So if the smallies can rally up here, and then you have this very significant trend line, you want to see that break. That breakout of that, unless it fails, is going to be bullish. Then a breakout, this is the next significant resistance level, about 23.35, 23.36. and then so forth and so on. Otherwise, we'll go down. That's I should say much more downside, not any downside. Much more downside will have taken out that divergence, and that doesn't eliminate the chance or the potential to bounce. It just reduces the odds, in my opinion, of a meaningful bounce. Remember, these 60-minute charts and 120-minute charts are my favorite swing trading time frame. They're really good for the trend trades or swing trades. Okay, let me roll into the VIX before I forget. I'll try to get to some of the mags, Mag 8 or whatever. VIXY is the proxy I've been giving you to trade with the trade ideas for months now. We've hit a lot of these bottoms. And this is the daily chart, some longer term targets I gave you. This was a downtrend line that was punched through today. But again, NVIDIA is going to report tomorrow. Look, we closed right on it. There's a good example of an intraday break. But if you're trading on the daily time frame, the most important thing is how you close the day. So you close right back on the trend line. Again, big divergent low. When I look at this, this helps align with my bearish outlook for the stock market. This is quite bullish here. Spot VIX looks bullish too. These are all potential targets. So, if NVIDIA really gives us a bloodbath, nobody can say for certain, but if it does, be ready to move and move fast, because the VIX, we were long here. We got in, and this is what I tend to do, get in before the big moves. We did it here. We did it again here. We did at least 3 hits on this right off the lows and exited right around the top there. And the last one was right here. Because once the VIX decides to let loose, and this, if it does this again, remember that was a big move right there, percentage-wise off the lows we got in. That was it says there 127% rally. It happens very fast. You don't want to wait for the 3rd, 4th day into it. You're going to miss most of the run, and then the VIX will often collapse as quick as it goes up. So it's a hit-run instrument. You really got to have your timing precise with this, and you want to just align it with breakdowns on the broad market, S&P 500 and the NASDAQ 100. 60-minute chart. That was it. Last time I targeted, we were right here. It was hit. We were there. It was that divergent low. We were long on that one. We caught that. I've been highlighting these divergent lows, and this is divergence that's been building. Again, that's a 60-minute chart. So that's still a minimum target, and I just gave you longer-term targets on the daily. You can look at the spot VIX. You can't trade it, but you can look at it. And this is what VIXY will track. VIXY tracks VIX futures. That's what you can trade. Futures on this spot VIX contract, near month, far month. You can trade options on those futures, but you can't trade the spot VIX. But you want to look at it. Obviously, you want to chart it. And this is it. Divergent low, 61% bounce. Divergent low, 55. Divergent low, 90. Divergent low, I don't know, somewhere in there. Divergent low, and here we are. So if we pop this, the VIX is going to let loose, especially if the NASDAQ and the S&P break the bottom of my trading range I've been talking about. Otherwise, they like what NVIDIA is selling tomorrow, then maybe the VIX is going to come back down to the bottom of its range. But there's certainly more upside potential than downside potential. But the downside can be pretty painful on the VIX. It moves a lot, even if it doesn't look, relatively speaking, it, measure it out. If we went down, that's 42% to get back to these previous lows. Okay, let's look at some of the mags. Then that way I can just keep this limited to the stock market. I'll try to cover Bitcoin before I wrap up here. All right, let's go to a daily chart. Let's kind of big picture it. I know I have busy boards here. I've covered this many times in the past, but you'll just have to trust me now. We have divergence across the board on the rarely seen weekly charts. That's where big trend trades come from. I'll just use Apple. They all look the same. This is my Apple weekly chart. Goes back to as far back as I want to go here in the late 90s, and I've included every single divergent high on the weekly. I've covered this chart many times over the years, including recently. 82% drop, 42 off the divergent high. That is 62, 45. 34, 35, 39, 35, 32, and I'm still targeting this uptrend line, which before all said and done, looking for about 45% drop, give or take, in Apple from where we're at right now. And it's this big, big divergence that tells me this time isn't going to be any different. We're going to get that turn and most likely come this year. Zooming down to the daily chart, you had this trend line break here, breakdown, back test of the white trend line, rejection. Then we broke this secondary yellow uptrend line. We had a lot of nice reactions. Broke that, rejected on the back test, and we remained below both of them, following this big divergent high right there. So there's Apple, and I'm going to zoom in a little tighter for you. This is resistance. It was support. You see when we had a breakout here to new highs, we danced on this level about 247.35. Then we broke it with one big red candle, went all the way down, kissed the 200 days. I highlighted it that day as it pulled back to the 200-day moving averages, objective long entry, bounced back up, back tested the yellow trend line and that 247.35, and boom, for the 1, 2, 3, now 4 days in a row, we've been testing that. So there it is, Apple at resistance. Just like I highlighted a week ago, NVDA at resistance. This is an objective short entry. Now, if it breaks that level, you still have another potential back test of the trend line. So, you wouldn't want to short a breakout above there. You'd want to wait for the next objective entry. If you're a bull, you can certainly take that. I wouldn't based on these divergences, but that's just me. NVIDIA, we've been swing trading this one long, short for a year now, and just knocking the cover off the ball on this one. Last short entry was just right over here, right after that deep seek gap right here was backfilled. Then you had the additional sell signal with the trend line break. Since it backfilled that gap down to the lows today, it dropped about 12%. Here's where it parked, right on key support. If you look at NVIDIA, visualize, I'll show you what I see. This trading range here. So it was a trading range. Deep Seek came along, and Chinese said they engineered a way to do AI a whole lot cheaper. You don't need these expensive ass energy intensive chips that NVIDIA makes to do it. They can do it cheaper with more efficient chips, cheaper chips, which would be a game changer. And I don't, seem the market just shrugged it off like it didn't happen. Maybe it's not real. I don't know. Fake news. I haven't heard that. But this to me was, it's simple technicals right there. It's objective. And what happened today? We hit the 200-day moving average. They report tomorrow. NVIDIA is not going to break down until after they report. It's going to hold. The buyers are going to come in and buy the 200. So this is it. And you want to put it, you have a safe number, take out the recent low. We briefly punched through there. Again, this is a daily chart. On a weekly, it never gave it up. It held it. And we tested. The red line's at 200 exponential. The blue is a 200 simple. So that's it. And I still have very aggressive long-term targets that I gave you in the beginning of 2022. Back here, 2024, last year. These targets. T1, which we hit right here. We hit that last year. Yep. Off that divergent high bearish engulfing candle. Had a bounce, put in ever so slightly, but marginal new high. And you can see these indicators have rolled over. The momentum is waning. NVIDIA is not, when you look at bigger picture, it's still in an uptrend, but that uptrend has lost vigor, strength. That's what momentum indicators show you. That's why you can see we're crossing down below that yellow line, which to me, if you look at the 9 EMA here, the signal line on the PPO, that delineates bull and bear trends, meaning when the white line is above it, like it was there, you are in a bullish trend. When it crosses below, like it did there, you're in a bear trend. And so forth and so on. We've crossed below. Same thing here. We're about to cross below. I put the yellow line here at about 50 on the RSI. Delineates below that bull and bear trends. Negative divergence. I mean, what's not to like about this stock? So on the downside if you're a bear. However, we've got to take out those 200-day moving averages. Turn off all the lines. That's what to do. Stocks above the 200s, you are in a bull trend. And you want to buy pullbacks to the 200s like we did there. When the 200s go, you most likely are in the early stages of a new downtrend, primary bear trend. And if anybody thinks that my targets calling for a 72% drop in NVIDIA are aggressive, just go back in time, look at the history of the stock after it put in divergent highs before, 70%, 56%. 86 and 90. And that's off each and every and the only divergent highs this stock has put in on the weekly chart since it started trading back in the late 90s. So, you know, if you want to say that this time is different, those are, what do they say, the four most dangerous words in investing. I don't know. Peter Lynch, somebody came up with that one. I forget who it was. All right. Maybe John Templeton. All right, so there's NVIDIA for you. There's Microsoft. Let's drop down to a daily chart. Microsoft, busy board here, but you know, we put in this divergent high. I've talked about Microsoft being one of the weaker of the Mag 7s in this trading range here, but also one of the first to clearly lose the 200-day moving averages. It's been testing it, buy. It's almost as if bulls cannot help them. It's a good strat. I'm not trying to be facetious. When I'm bullish, I buy pullbacks to the 200. They buy, you do it. It's a great strategy until it isn't. And that is the thing. When it stops working, when the 200s give way, and they gave way recently, and they back tested. You can see this 200, the red line's exponential, the lower of the two. Broke, and then you start shorting rallies back. And now you have a nice rejection. You're comfortably below those 200-day moving averages. The only thing better than that to short Microsoft would be to see, which I'm waiting for, the majority of the Mag 8 to break down. Microsoft will only go down so much without the rest of the lot following them, meaning the rest of the Mag 8. So that's it. So that one's just like back in the top in 2000, late 2021. You had two of the Mag 7s broke down first below their 200s. The rest were holding the market up. And then when the rest started breaking down right in the beginning of late 2021, early 2022, boom, game on. We started a bear market. And so Amazon heading there, not there yet, but certainly a short entry there, you know, divergent high, beautiful bearish rising wedge pattern on the trendline break right there. Secondary sell signal on the break of that nice support. There was your all-time high, breakout to all-time high, backtest, failure. Fewer things in trading are more bearish than a failed breakout. So now we go down. It's the secondary trend line I have. Once we take out the 200-day moving averages, it should increase the odds. We're going a lot lower. You can see some potential targets there. Let me move on a little faster. Alphabet, major uptrend line right there in yellow, and the 200-day moving averages as well. So here's the takeaway. There's so many of these. The charts right now are just stacked. They're just, all these levels could literally go in one day. Now that one day may be tomorrow or Thursday, or it could be 6 months from now, if they're this way. What I mean by that is we have so many of these market-leading stocks and the indexes at support, following bearish engulfing candles. And guys, again, I'm going to say it. I know I'm repetitive. Support is support until unless broken. So if you believe Kramer, whoever's telling you this market's going to new highs, and maybe it is, this is where you buy. Just like you bought here. That was a whipsaw. I addressed it at the time. We didn't let them shake us out. We got long and bullish on the August 5th lows. Google Alphabet was the only one that pierced down below thereafter. Most of them rallied from there. So this is the strategy. Buy the 200s, buy the 200s, buy the 200s. Unless you think the 200s are going to go. If I'm bullish on something, I think it's going to continue higher in an uptrend, I will buy pullbacks to support. If I am bearish, I will wait for a break of that support and to initiate a short. And so those are the levels to watch right there. Or that's and then the uptrend line just below. To replicate that, make sure you're using log scaling. You're going to get a different chart if you don't have log scaling turned on. And so, but they come in together. And what I'm waiting for today, I had a lot of alerts fire off, and I have a lot more set waiting to go, like that yellow line, the 200s. And we get that, then you can see price support there, and then it should be lights out for this stock and the market. Meta, nice the white uptrend line it's coming up on now, divergent high, been dropping since. So we're finally seeing Meta was one of the last, it was the strongest holdout, and then this is what they're coming after them now. They're going after the high flyers, the holdouts that have defied gravity, down 13%. But look, great support. This is a chart I gave you before. Boom, 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 and price support. So this is it. So if you're bullish, step in there. You probably even put a little downtrend line. I think it's picking up nickels in front of a steamroller, but if it's objective, I can tell you that. Or wait for that level to break. Set a price alert below 634, and then that would be a sell signal below that trend line, and then you get the 200 days. It's probably going to head down to right there, and then price support just below. So if this one goes, like for Meta, for example, my guess right now would pierce through them intraday or intra-week, hit that 543 before the buyers step in. So I wouldn't be buying the first tag of the 200s. They might, it could, but it's really nice price support that comes in just below there, and that's probably what would happen. All right, one more. Tesla gave you some targets back here a while ago. Divergent high. T1 was already hit. T2's hit today, so just change that to HIT. T3 zone, T4 zone, T5, T6, so forth, so on. If you're trading on the 60-minute chart, I also gave you targets there. It does have, oops, I didn't mean to do that. It does have some positive divergence, so if the market likes what NVIDIA is selling to, but by the skin of its teeth. See, if we go any lower, the divergence will be taken out, and we'll probably go lower. It's from my experience, when you get this close to a pretty well-defined support level, it's almost like gravity. It's going to pull it in down to that level. So there's your, if you're looking to buy Tesla or cover Tesla short, well, it's also a price target, T2 274, a little over 274.21. Okay, video's going long. I'm going to get to Bitcoin so I can wrap it up. This chart I've been covering with you for a while now, waiting, watching, and this is it. This is BTC, the actual crypto, trades on the Paxos exchange, whatever. I use Bitcoin futures as my cup of tea, BRR. You have MBT, which are the micro Bitcoin futures if you don't want. But there was great support right here. Look at that support shelf. And we broke down and back down. We were in the video, probably because the market was at support, and you also had this uptrend line. It comes into the left of the, goes to the left of the chart, but it comes in right there as well. And so, boom, back test. So unless Bitcoin, and if it gets comfortably back above here, and then really this level right there, about 94,626, I could see a little punch up there to clear some stops. But I can also tell you it may not do that. I wouldn't be concerned, is what I'm getting at, until it takes out this downtrend line. And if it does, then this whole thing's a whipsaw, and that could be quite bullish and send Bitcoin up and maybe even above that. You can see I have the green line bullish above there and the red line bearish, which it broke down today and is close to back testing. So there's a powerful sell signal in Bitcoin unless it proves to be a whipsaw. And if it does recognize that, you shorted Bitcoin today, or if you're already short, or if you added to a short, or if you're going to short it tomorrow, you would want to short up to that right here, the red line, but not above. If it starts going above, maybe sit tight and wait for a rejection and a failure back down below would be what I would do if I didn't already have a position of Bitcoin short. I gave you a while ago. It's been a while because we've been in that trading range. IBTI is a trade idea. We shorted that somewhere in here. I gave you S1, meaning first support, hit. And then we had a divergent low even. That was after that divergent high. As I last update, I told you we made an equal and still divergent high. IBIT, again, is one of the more liquid Bitcoin ETFs. And then boom, look, today, this is that same trading range I just gave you, our support level on Bitcoin, the actual crypto. There's a comparable trend line, comes a little, because remember, these ETFs are going to do a perfect job of tracking. So we hit my first target today. So that is now hit, HIT, T1. It's taken a while to do it. And that's it. There's the rest of your targets. And then on that, a very related trade, as I give you an update, MicroStrategy, MSTR. That one was on the daily chart. We shorted that shortly after this beautiful bearish engulfing. You know me, I love me some bullish and bearish engulfing candles. Bullish engulfing candles come at the low, bearish at the highs. So we shorted it right there. We hit T1 pretty quickly, which was this uptrend line. Then we hit T2 here, and then I gave you the last update yesterday that we were there again, and now we broke it today. And again, not mere coincidence that this 280 support defined this trading range in MicroStrategy, which is chock full of Bitcoin. They own Bitcoin by Bitcoin. And now again, I, you know, I am nimble. I use that line from the movie Heat. When De Niro and Pacino sat down for the first time ever, first scene ever in any movie they ever did together, and they're in the restaurant, and Pacino was playing the cop, or De Niro was a criminal. Said, if I feel the heat, something about walking away. If you can't walk away from, in 60 seconds, I can do that. If I feel the heat coming around the corner, I'm able to walk away. Same thing with this trade. If they pop up here, and all of a sudden, that would be a massive bear trap. And then again, not right away, but if this trend line's taken out, and then this price support, boom, we're probably going to rip because it'd be short covering. So as of now, that hasn't happened. What has happened is we broke down today. So any back test there is objective short entry, even to the trend line, but then not above it. And then that would bring you down. Next target's T3. And then my fourth and final target, which initially was this trend line and this support level here. But the trend line is going to come in closer to T3. So T4 is now that price support down there. And again, maybe I'll, 2 days from now or tomorrow or next week, I could be long this one. But as of now, it's a nice short. Has been. And it was an objective add-on today on the breakdown. Okie dokie, I'm going to wrap up there. I will tomorrow update. There are a lot of the grains I'm looking interesting again. I'm starting to scale back into some. I've kept a core position of wheat, corn, and soybeans. I told you downtrend lines about a week ago, but they pulled back to support today. So I like those. Entered back, scaling back, added some back there. I still like the toppy things, cocoa, coffee, the shorts. What else? What else is there? And I'll get to gold and silver tomorrow and GDX and all that good stuff. And natural gas. Somebody asked me today, natural gas. I give my thoughts. I'm still long bullish, thinking there's one. We haven't hit my target on the futures. Remember, we hit it on UNG just last week, but on the 60-minute chart. But I told you my target on the futures was higher. So I think the momentum's still there. I think we can get that one last thrust higher. I'm still targeting. I have been all year, since last year, just shy of the 490. There's nice resistance, 490. And I put a chart up. You can check one of the earlier posts today. I put the chart up of NatGas futures there. Okay, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.